to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. This is Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. And in this show, we get your complete wrap of all the stocks which are buzzing in trade. I am Agam Vakil. Let's welcome in our experts then. We have independent investment advisor Sharmila Joshi, Kalra of Target Investing, and in a few moments we will also be joined by Lancelot Cunha of Value X. Today on Hot Money, we will discuss ONGC, multinational pharma companies, Marico, and graphite stocks. So let's get on with it, and let's start off with ONGC. And I know this is going to be a little bit of a contentious issue, but it has posted its highest net realizations in at least 11 years. The company has also managed to cut down on a sizable chunk of its debt in the quarter gone by. Let's find out from our analysts what they're making of the earnings. So Samir, I'm going to start off with you, and I do believe, and I remember having a conversation with you about ONGC, and you did have a favorable view. Do you still hold it?
Yeah, so I still hold it. After the results, we still added in the morning itself. If you see the realization, forget about the 11 years being higher.
Right.
It has to be more sticky. And I think in next two, so we were expecting that July, August, September will be a downwards towards the crude. But somehow July passed on and the crude didn't correct as much as people expected it to correct. So I think now if the crude prices are sticky, the realization will be sticky for at least next 2 quarters, right? Where I think a lot of benefits will come, because production this year, this quarter was 5% down from as compared to previously. So that will get realized because there are certain legal hurdles in that which have been removed. So now they can expand the current production. Their costs have gone down. If you see the employee and the interest costs, as per the revenue, as a percentage of revenue, they've come off.
Right.
As per the absolute numbers, they've gone up. So I think they're able to maintain that on a sustainable basis for next 2 quarters. I think the street will change its view to a certain extent, and it'll come out as a favorable play.
Okay, it'll come out as a favorable play. That's what we're banking on right now. Sharmila, what's your view on this one?
Well, you know, I think completely I agree that the results were good, and I think it was a given because, you know, ever since we've had this scenario that the companies can do their own pricing, and we've got into that kind of a zone, crude prices were actually on moving continuously downward. So it's only been, you know, in these last 5-6 months where we've, as Samir was saying, that we've seen crude move up and stay there for a good period of time, and which has obviously resulted in, which was a given that it is going to result in better numbers for an exploration company. For me, actually, the concern is not so much on the results, but the fact that, you know, every time we talk of crude prices going up, then there is always a concern that there could be some re-emergence of subsidy sharing.
Sure.
And there could be a formula which says that if Brent is above $70, then you get into a subsidy sharing and so on. So I sincerely hope that doesn't happen. So I think that while if crude stays in this zone, it's definitely a good time to be invested in ONGC.
Okay, well, we also have Lancelot with us right now. Lancelot, thank you so much for joining us. We were talking about ONGC at this point in time. How are you viewing the earnings, and what's your take on this one?
Well, I think, you know, strong crude prices have been beneficial, and we've seen profits grow. I think the crude is likely to remain in this range. It's not going to fall significantly from here. That's my view. And also there's larger gas exploration output expected to be released from the new fields that are coming up. So I think all in all, there will be an improvement in profitability for ONGC, and you can look at maybe a 20% growth in the earnings from here.
Okay.
So if that happens, I expect prices should also move up as well.
Okay. So as usual, it's 3 against 1. So I have to take the position against ONGC at this point in time for the sake of the debate. ONGC has hardly given you the kind of returns that any other stocks would or be able to give you over the past few years. We've seen these gyrations in crude over the past few years. It's seen its highs, it's seen its lows. Then what is it now that stands out for ONGC at this point in time, Samir?
See, certain stocks if you see on the overall ALE pattern,
Right.
they don't move up that much, but they'll fall at certain places. Like she mentioned, subsidy sharing.
Sure.
If we go back to 2014, that's where the subsidy sharing actually hit ONGC books. That was around 36,000 crores as a subsidy share of ONGC for a total 53,000 crores.
Right.
That time also the stock took a dive down. It came to 150, same levels, 150, 160. Over there, if you buy that, and once this subsidy hangover went out, it came back to 230, 240 levels.
Okay.
So overall, it wouldn't have moved much on the upside.
Yeah.
But the downside, if you're able to capture and buy at that point, I think that's a better place to be. It's not a compounder because of two reasons. One is always the oil prices when they rise, the subsidy hangover comes to the stock price. Secondly, being a PSU, there are certain regulations issues which come in for investors to take a better dive.
Right.
That's why they go to the competition like a Reliance.
Okay. So some valid points made out there, Sameer. But Sharmila, can you build on that? In that case, do you think it's a market-beating stock, and at this point in time, you wouldn't mind advising your clients to put in money in ONGC?
See, as I said, my concern is really on this whole subsidy sharing issue, because, I think that numbers are now good, and it does look like crude is not coming down in a hurry. So, which clearly means that profitability for ONGC will continue to look good. And also completely agree with Sameer on the fact that you've not really seen the stock, the 2014 kind of subsidy burden that it had, it's never really recovered from that,
Right.
So you had the stock at 150, 160. So I think in that sense, it's spent enough of time over there. So if, let's not forget that we're getting into an election year, and if crude stays at this price, and still the government stays with its, with this theory of not, continues the story of not sharing any subsidy burden, then I think it's a definite positive for ONGC, and definitely it can be looked at. So there is a little caveat there, but I think that you can slowly start. I wouldn't be as positive on it as Sameer is, but I definitely now think that this is a good level to enter into ONGC in a small way.
Okay, Lancelot, can it beat the markets? That's the simple question here.
I think it's difficult to see it beating the market, because if you see the market is being driven up by strong, earnings companies where the earnings growth is significant based on the spend that we are seeing, so mostly lifestyle companies, etc. So if you look at whether it's going to beat the market, I think if the commodity prices are low and you're buying into it, and then you see a rise in commodity prices, like crude prices, then you would get the upside.
Right.
But here we are already seeing a high level. So from here, if you see whether it's likely to beat the market, it's difficult, but it will give you a steady 20% return, because the earnings are going to grow as far as the business is concerned. And you will see, that reflected in the stock price. It's not going to get re-rated upwards.
Right.
But even at the current PEs, if the earnings grow by 20% over the next 12 months, you will see the stock getting that benefit.
Okay, fair enough. A lot of important points being discussed here with respect to ONGC, which has seen its ups and downs over the past few quarters and years, perhaps. But we'll move on to another sector, and then let's put focus on the MNC pharma stocks, which have continued to outperform the pharma index as a whole, and we've also seen a lot of traction beating some of the domestic pharma companies. So my question really here at this point in time is, can we continue to see that outperformance from the multinational pharma companies? Case in point being something like a Pfizer, or I'm going to throw it open to you, back at you, Lancelot. What's your view here, and do you think that outperformance can come through?
Well, I think, the MNC pharma companies have always focused on the high value chronic illness, medicines, which are giving them higher margins. There's also, let's say, a lot less floating stock available, and there have been more people who want to buy the stock, and hence they've been trading at relatively high, price earnings.
Right.
They also do not have the problems faced by the other pharma companies, because they're not really impacted by what goes on in the US, since their business is completely India focused, being subsidiaries of the global players. So to that extent, their business in India is India focused, and the India market for pharmaceuticals has done well.
Right.
If you compare it with the others, the biggest beating they've taken is not on their India business, the domestic players, it's mostly on their US and overseas business, where we've seen the price erosion, etc. So given that background, you will continue to see these domestic, the multinational pharma companies, build on this base, and they will continue to trade higher than the domestic pharma companies.
Okay.
Because of the global issues and earnings growth scenario that we are seeing in the domestic players.
Right. Sharmila, I'll toss it over to you. Your view here.
Well, in one word, yes. I think that you will continue to see them get better valuations. So I think it's a two-part answer. One is that I think that entire pharma space seems to be getting re-rated, and I am expecting the entire sector to do better going ahead. And to talk specifically of MNCs, yes, I think that their EPS growth, what they've shown, better margins, etc., has been on a very strong wicket, and they have lesser regulatory issues because they are addressing a bigger sort of a domestic market.
Right.
So they've seen less of that price erosion, etc. Yes, I think Novartis has been a bit of a dog in that pack, but otherwise, whether it's a Sanofi, whether it's an Abbott, whether it's a Pfizer, GSK Pharma, recently we saw the numbers. I think all the numbers were definitely better than analyst expectation. So yes, I think in one word, this is a sector that will outperform domestic pharma.
Okay. Sameer, I reckon you disagree.
So I think maybe for a quarter more it might happen because see, if you see the MNC farmers, they faced a lot of issues in 2017 was the 2016-17 the NPPA list came in, pricing list, and the FDC combinations which were banned.
Right.
Over there, GSK and a lot of these MNC farmers took a hit. Even at a STEM level, there was about having their own issues. So I think they faced a lot of issues in 2016-17.
Right.
Right. So the base was lower for them. So 18 onwards, the whole base came at a helping hand to them. They did higher margins also because the pricing power in some areas came back to them.
Right.
So that was allowed over there. Same time, what happened, domestic pharma faced US FDA issues, which are a longer solution kind of a thing. So I think next quarter or 2 quarters beyond, I think domestic should come back and overtake the performance level.
Okay, so I'm just going to extend this to you. You feel that on a relative basis, domestic companies at this point in time, from say a year or two horizon, stand a better chance to have better returns as compared to MNCs?
Yeah, because if you see MNC performances, they always have these kind of blips, and then they stabilize in the returns.
Okay.
They don't move that quickly into that system. Over there, domestic pharma always has this compounding at a higher speed kind of a thing, because they have a more downside risk over there. So I think over there the companies now have felt a lot of pressure in last 2-3 years because of US FDA. Now as they get sorted by one and one, the base will be much smaller for them.
Okay.
So next 2 years I think the base will be, as in the numbers will be better off for a domestic, and the return performance will be better for them.
Okay, Lancelot, would you like to offer a rebuttal here based on the points that he's made?
I think the key is how the domestic companies are going to face in their overseas markets. And maybe a year ago it was felt that things will get sorted in a year. Now we are a year beyond that, and everyone's saying next year things will get better.
Right.
So while I do not, I do agree that yes, things have to get better. I mean, it's not a permanent solution that there's not a permanent market scenario. I think over the next year, we may not see that kind of recovery, the fast recovery that we are anticipating.
Right.
Because you see, the change that has happened in the US is a fundamental change. It's a change in the working environment over there. It's not related to a performance of one company or 2 companies. It's the entire spectrum that is being affected. As far as the US FDA approvals is concerned, I think that issue is got sorted out for most of the companies. They are getting their plants certified, and they will be able to export. But the question remains on the pricing pressures that we are seeing in the US, and if after spending so much money on filing ANDAs, if they're not able to really generate returns, and the margins are so low that it's not becoming viable, it's going to be a big challenge for them to generate profits on their business.
Okay.
And for many of the Indian companies, the US and European business is constituting above 40 to 50% of their business itself. Right. So when 50% of your business is going to get impacted, it will take you a longer time to fill in that gap. So I think that, while we may expect that things will turn around in a year, sometimes it does take, or 2 quarters, it may take 3 or 4 quarters. And then when you look at it 1 year from now, yes, if you look at 2 years or 3 years, Indian pharma should outperform given the way the stocks have fallen. So whatever deterioration you've seen in price, right, you will see that outperformance come up. But in the next 1 year, I think it's going to look very difficult.
Okay, I'd love to extend this conversation, but I'm going to have to move on to the next one. At this point in time, there were points made on both sides of the debate. 2 and 4 and against the MNCs, but I'm going to move across to Marico then. Its first quarter profit in rural markets, which has outpaced the urban markets, and let's not forget, we've seen a little bit of recovery, although this was largely on expected lines. Sharmila, it's not necessarily been an outperformer, not only in the FMCG space, but in the broader markets in general. What do you make of Marico now?
As you said, there was some sense of a bit of a miss in the numbers, but I think that they've also had to contend with high copra prices, and now we are seeing those correct. So I think somewhere that it will get sort of neutralized going ahead in the coming quarters, and they have taken a price rise and prices are coming down. So that situation will sort of sort itself out. I think the stock corrected post numbers, so right, both things have sort of worked. So I think at current price it looks decent. I think the little bit of disappointment was also because Dabur came out with these stellar numbers where they spoke of 21% volume growth, and yes, then anything that else that came after that got sold into, whether it was an Imami or whether it was a Marico, which right, is a little unfair. But I think if you just look at the numbers on their own merit, I think they were okay, they were in line, and post correction, I think the stock looks okay.
Okay, Samir, how are you viewing this development here?
So, see, as a result wise, it was more on the average, because what I feel that since I've been covering this sector, I would have seen a lot of money which they're coming out with, have a diversification which reduces your dependency on copra prices.
Right.
Your raw material still is dominated by copra.
Absolutely, yes.
Right. So if you're having such a good cash flow generation, you would have expanded over the years and got into different, so that you are able to negate it, because right, it gets unfairly valued because of that impact only, because everyone tracks the copra prices and expects the result to happen. I think next 2 quarters will be better because copra prices somewhere have come down.
Right.
So last quarter, which was there, reflected the earlier price cheaps. So I think this will be good. Their volume growth is coming out well. So I think that these things have to have a deviation from the other copra-led products.
All right. I'm gonna have a few points to make here, but yeah, can I have your comments as well here?
Well, I think it's expensive at this valuation. It's
right,
trading almost 50 times earnings. And probably the copra price fall hasn't been as steep as the company would have liked to expect. So during this last quarter, it's been pretty tough for the company. They've had to reduce on their advertising and promotion spends, which has come off. So that could impact the brands in the long run, because you're trying to maintain profitability by cutting costs. I also think that if you look at this 14% year-on-year volume growth, and if you compare it with maybe quarter-on-quarter, it's only 4% quarter-on-quarter volume growth. So most of the growth has come through price increases.
Right.
So they have now, going forward, you may not be able to take that many price increases that you did in the past, because again, market dynamics comes into play. So I think that it's going to be difficult for Marico to continue to maintain this kind of growth rate.
Right.
This quarter, they've had to focus on cutting costs to maintain profitability. But copra price is going to be the key, and how that moves. And this company, like he said, it's completely dependent, because a significant part of their volumes and business comes from these products.
All right.
And if copra prices remain high or do not fall as much as anticipated, it could hurt the margins, and that could hurt profitability. So it's expensive, but it's a good buy from a long-term perspective at a price correction.
Okay, so I'm taking from your comments that you wouldn't be in favor of Marico, and there are other opportunities out there if you were to look at something in this segment then.
Sure.
All right. So Sharmila, then in that case, let's discuss the possibility of volumes growth picking up. We've been talking to the management, and they are suggesting, they're not denying the competitive intensity. Keeping that into consideration, and Sameer's made a valid point on the fact that the high dependence on copra-based products. How are things stacking up then?
So, I mean, there's no escape from competition, right? I mean, you are in your product is such that it's not the kind of product that you can't expect competition from both from the organized space as well as unorganized space. But and again, if your main raw material is copra, that's it. I mean, there's no escaping that. So you have to manage your business within that parameter. One way could be also to, if you have a good cash flow, to go into other products where the dependence is less. But at the end of the day, if you are going to make coconut oil, you are going to use copra, and there is going to be competition. So you have to deal with it. I'm just saying that that market is that size is going to still be sizable, in a country like India, and you will have a certain amount of price flexibility going ahead. And I'm sure there are other things that FMCG companies come up with to counter these things. So as I said, because the stock corrected and the results were in line, there's no denying the fact that there is competition, or that copra prices as a major raw material could be a challenge, but you have to deal with it, and I think at this price the stock is okay.
All right, Sameer, I just want to address the fact that while copra prices have been the focal point over the last 1 year, the management suggests that this is a cyclical feature, and at the end of the day, this last 1 year has been very tough for input costs, but otherwise everything else seems to be on track, considering you see an expansion and a higher disposable income, just higher demand eventually is going to make things fine. So based on that, Lancelot suggested that you may not see the kind of volumes that the company might be expected of. What do you make of this?
See, what happened with them, they tried to diversify when they took the portfolio from Paris.
Right.
The Livon, the deodorants. That time we had a certain stake in that.
Right.
But that went wrong because a lot of competition then came up, and then the margins actually squeezed out. So that didn't get time. So it's not that they haven't tried to do it. If you see the Saffola brand, that has faced a lot of competition in the years. The only problem which I see with them, they have a lot of market share, but they still don't have pricing power.
Right.
So the cyclical nature of the raw material, you're not able to negate off.
Right.
So if 3 years you've seen a downside, you were not able to expand your margins to have a buffer for an upside of a copra to negate it out.
Okay.
So I think over there, that kind of a pricing power is still not there.
Right.
Otherwise, I think they were able to, when you have certain market shares, you're able to generate a lot of margins and a lot of cash flow at least, which helps you out in diversifying or increasing your outlets. So even their outlet expansion has been very minimum if you compare the other places.
Okay.
So I think these kind of issues are facing them. So I don't see a lot of downside to the stock, but I don't see a lot of upside coming in.
All right, there you have it. So, well, I would say mixed cues coming in for Marico. And we move on to the final discussion, and that is graphite stocks. The question is simple: will the rally continue? So, I'm going to toss it over back to you, Sharmila. Do you think we'll see more from HEG and graphite?
See, the graphite story per se, I feel, is on a strong wicket, and that is likely to continue for the next year and a half, given what is happening globally, what is happening with prices, etc., etc. The only thing is that this is a story market has discovered, because I think that the way we've seen these stocks rally, it seems to suggest that market is fully aware that this is what is happening in HEG and graphite. So the question remains that can the stocks go up from here? So I think yes, because I think earnings are still on a strong wicket, and we saw, I think, earnings from HEG, I forget, last week, and they sort of indicated that that part of the picture still stays intact. So you will obviously not get the kind of rally that you've seen already in HEG, but I think even from these levels the stocks can give you returns.
All right, would you agree, Sameer?
So I think maybe next 2 quarters the rally will be there, because if you see the base quarters are still very low. as compared to March and June quarter.
Yeah.
They were the high bases. So till that time it comes into the base, there is a potential of that rallying extending, because see, there are two factors. One is the price. So either the price really goes up from here so that the rally goes. Even the management says the price will be stable. It might not go up too much, it might be stable. So there is a downside risk to that. Second, you have not added capacity.
Right.
So when you've not added capacity and you're running on the full operation, how will you add volumes to the system for a year-on-year growth to be shown beyond certain time?
Right.
So I think next 2 quarters there is a space of a rally, but beyond that I don't see, unless the capacity or the prices move up really.
Okay. Okay. All right. How about you, Lancelot? More legs to the rally?
See, I wouldn't say that there's no more legs to the rally, but yes, the thing is there is an increased risk as well. Right. So what happens is, like, when you have a capacity constraint, you have, you know, the fact that probably this demand scenario and your pricing power will be there for the next two quarters, and thereafter you're not so sure about how the increased growth will come in. There is a greater risk in attempting to buy or into the stock at this point in time. It's also a market discovered story.
Right.
So it's not that, you know, they'll get re-rated because there's something which is not known in the marketplace. So I think it's fairly very well understood and people have discovered this. So there is a much higher risk, and I would probably stay away, or maybe, you know, stay away from this at this point in time, because if there's 1 quarter of negative news or there's something which comes in negative, you could see this drop significantly.
All right.
So you do not want to take that upside which is limited and have a much larger downside potential.
All right. So Sharmila, concerns here, capacity and pricing.
One more concern. You saw the stocks correct because they were put in the ASM category.
Oh, yes, of course, yes. That's a risk that a lot of stocks out there, face. But that said, yeah, you want to offer, some sort of response to these two concerns.
No, so obviously, I mean, which is why I said that this is a story that market has discovered. So there is nothing. This is not the first rally that we are seeing, and the pace of the rally can't continue because I think all these factors will come in at one point. But it's just that earnings will continue to stay strong over the next year and a half. So you may see them move up gradually in line with whatever valuation they fetch at that point in time. But from current levels, I would think that there is an upside.
All right, there you have it. So, well, levels look lofty, but you can't necessarily rule out further upside. And at least in the near term, it doesn't seem like there could be, some halt to these stocks. That's the view coming in on graphite stocks. And with that, I'm going to thank all our experts here to join us and take us through their views. And with that, it's a wrap on this edition of Hot Money. Ask BQ is up next. Stay tuned in a Bloomberg Quint.